Hello everyone, welcome back again. In my previous videos, I have explained you how to prepare the income and expenditure account with various adjustments. In this video, I will show you how to prepare the income and expenditure account and also the balance sheet. So this is the question that we have, and this information are related to a hospital, and they have given us the receipts and payments account for the year ending 31st December 2010 and also the additional information. We have to prepare the income and expenditure account for the year ending 31st December 2010 and also the balance sheet for the same year ending 31st December 2010. So here they have given us the receive side, uh, the receives, and also on the payment side all the payments which are made in cash during the year. And in the additional information they have given us the opening date, the information related to the opening date and of the year, and also they have given us the information related to the closing date of the year. So here what we have is whatever is opening is actually the closing of the previous year, so we should understand that. And they have given us the additional information related to subscription outstanding at the beginning as well as at the end. They've given us subscription received in advance at the beginning as well as at the end. They've given us the stock of medicine at the beginning as well as at the end. They have given us the opening value of equipments. They have given us the opening value of buildings, and they have said to depreciate building by 10% and sports equipment by 20%. They have also said to capitalize entrance fees and donations. So we should keep that in mind. And then let me first of all separate the items which are of revenue nature and which will come in the income and expenditure account. I'll show you the income and expenditure account first, then I will show you how to prepare the balance sheet. Now starting from the receive side, subscription is a revenue nature item. It will come in the income and expenditure account. Donation is to be capitalized, so it will come in the current year's balance sheet. It will not come in the income and expenditure account. Then interest on investment is a revenue nature item. It will come in the income and on the income side of the income and expenditure account. Sale of tickets in charity show is a revenue nature item. It will come in the income and expenditure account. Entrance fees they have set to capitalize, so it will come in the current year's balance sheet. Then on the payment side we have doctor's honorarium. Medicines, we have to take medicines consumed. We have the opening value for medicines and the closing value for medicines, so we will take the actual medicines consumed during the year. Then doctor's honorarium is a revenue nature item. Salary is a revenue nature item. Miscellaneous expense is a revenue nature item. Then equipments is a capital nature item. Expenses of charity show is a revenue nature item. So these items will come in the income and expenditure account. And besides that, we also have to see the adjustments while taking the items in the income and expenditure account. So let me start from the income side first. So for that I have to see the receive side. So I will start with subscription first. If you look at subscription, we can understand from here is that 60,000 rupees was received as cash for subscription in the year ending 31st December 2010. So they have provided us in the additional information that 400 rupees was outstanding at the beginning. So we assume that this is received in the current year. That means the outstanding or at the beginning means it is the outstanding at the year ending of the previous year. So that means it was an outstanding in 2009. So the total outstanding was 400 rupees. So we assume, if no information is provided, we assume that this is received, the outstanding of 2009 will be received in 2010. So it is there in this 60,000. So we are going to subtract this. On the other hand, subscription which is due in the current year, we have to add it because this is the outstanding of the current year which the members have not paid and the organization did not receive. Then if we look at the subscription received in advance, the advance that was received in the previous year is the advance for the current year which is received in the previous year. So the members will not pay it again in the current year, but this belongs for 2010. For 2010 will be added. On the other hand, 180 is the advance which is received in the current year. That means it will be there in the 60,000, and this advance we assume that it is for 2011. So this 180 is for 2011 and it is present in the 60,000. So we are going to subtract this. So 400 rupees will be added, subtracted, 250 will be added, and then 100 rupees will be added, and then 180 will be subtracted. After we do this, the subscription presentation will appear in this way. We will take the total cash, that is 60,000 rupees, which was received in the year ending 31st December 2010, out of which the advance which was received in the previous year, that means which was received in 2009 for 2010, will be added because it is not present in the 60,000. Again, the outstanding of the current year, that is 250 rupees, is the outstanding of the current year. It is not present in the 60, so we will add that also. Then the advance which is received in the current year for 2000, this advance is for 2011 but received in 2010, which is present in the 60,000, will be subtracted. And also the outstanding of the previous year, this outstanding is for 2009, we assume that it is received in the current year, so it will be present in this 60,000, so that also is removed. So after the adjustment, we get the actual subscription of the current year on accrual basis, so it becomes 59,770. So this is the actual subscription for the year. Now besides that, we have taken subscription. Now we are going to take interest on investment, which is 10,000 rupees. So we will take this. We can also take sale of tickets in charity show. So these two items can be taken. So when we take them, we will have buy interest on investments 10,000 rupees. It is an income. By sale of tickets in charity show is an income 13,000 rupees. So the income side is over. Now we will start from the expenditure side. For the expenditure side, I will start with medicines consumed. So if we look at medicines, we can see that the opening value of medicines, that means last year the closing at the end was 6,000, that becomes the opening in the current year. 6,000 rupees was opening. Then we have purchases made during the year is 35,000, and after that the medicines have reduced to 10,000. This is the closing at the end, so the medicine stock remained was 10,000. So when we present this in our income and expenditure account on the expenditure side, this is how it will appear. The actual medicine consumed is 31,000. The calculation is like this. Opening was 6,000. We add the purchases, then we deduct the closing from the additional information. So the actual medicines consumed will become 31,000. Next we can we can take these items. Doctor's honorarium can be taken, salaries can be taken, miscellaneous expense can be taken, expenses of charity show can be taken. They require no adjustment, so we can directly take them into the expenditure side of the income and expenditure account. So to salaries 20,500, to doctor's honorarium 10,000 rupees, to miscellaneous expenses 700, to expenses on charity show 5,000 rupees. Now we will look for the additional information. What are the items which are left? We have equipments, we have to depreciate. So we can see here the opening is 20,000. They have asked us to depreciate equipments by 20%. So we will depreciate that. Even on the purchases also we have to do that. So the new purchase is 15,000. The date is not given to us, so we assume that these purchases are made at the beginning of the year, so we have to provide depreciation for 12 months. The opening also is for 12 months, and the new purchases also will be for 12 months. And also for building also we have to calculate the depreciation on the opening, that is 80,000 for 1 year, depreciation at the rate of 10%. There is no purchase of building. We can see on we we don't see any purchases of building, so it will be only on the opening value. So when we calculate the depreciation, it will be like this. For calculating depreciation on equipment, we have the opening in the additional information is 20,000. Purchases from the receipts and payments account shows that 15,000. So this purchase, the date is not given. We assume that it is purchased at the beginning of the year. So for both, for 20,000 and for 15,000, we have to provide whole year's depreciation. So the total value, opening value for which we have to provide depreciation is 35,000. So if we provide depreciation at the rate of 20%, that means on 35,000 at the rate of 20%, the depreciation comes to 7,000. That is for sports equipment. For building, we have only the opening value. So for whole year, if we provide depreciation on that at the rate of 10%, it comes to 8,000. Now, if we present this in our expenditure side, we have to depreciation on building, it is 8,000, and for equipment, it is 7,000. So the total depreciation is 15,000. So we have entered all the incomes and all the expenditure. Now we'll try to find out our deficit or surplus. Now when we total the income side, we find that income side is more than the expenditure. So the total income is 82,770. On the expenditure side, if we add all the expenditure and we subtract that total amount from 82,770, we get a surplus of 570. So I hope the income and expenditure account is clear. Now I will show you how to make the balance sheet. Now in this question, we have to see first of all whether they have given us the capital fund or not. Now when we talk about the capital fund, let me just relate this with the profit-making organization. A profit-making organization generally has a capital, but for not-for-profit making organization, it does not have a capital. So in this case, the not-for-profit making organization actually has a general fund, which we call it as the capital fund, which is just similar to the capital for a profit-making organization. So here in this question, we don't have the capital fund. So in order to get the capital fund, we have to prepare the opening balance sheet. That means the balance sheet which is made at the end of the year in the previous year. That balance sheet we have to open it, which we call it as the opening balance sheet, so that we can find the capital fund. The capital fund is not given. The capital fund is important for the current year's balance sheet, because without the capital fund, the balance sheet will not be complete. So we have to get the capital fund, for which we have to prepare the opening balance sheet. If in the question they give the capital fund, then we don't have to prepare the opening balance sheet. But here we have to prepare the opening balance sheet. So for preparing the opening balance sheet, we need the assets and the liabilities of the previous year's ending. So for that, we have to take the information from the receipts and payments account and the additional information. So let me start by preparing the opening balance sheet first to calculate the capital fund. Now to calculate the capital fund, what we do it is we try to find out all the assets of the previous year and all the liabilities of the previous year. So in this receipts and payments account, these are the items which will come in the opening balance sheet. The opening balance of bank will come in the opening balance sheet, because this is the balance which is opening, means it is the closing balance of cash of the previous year. So opening balance sheet means the previous year's closing balance sheet. So this 7,000 rupees will be there in the balance sheet on the it will be there in the previous year's balance sheet as cash on the asset side. Then again, if we see, we can see there is an interest which is received as 10,000 rupees. This 10,000 rupees is not from the new investment, but it is an interest from the old investment. So there must have been some investment in the previous year. So for calculating the investment, they have given us this 10%. So we will be calculating how much was the investment for which this 10,000 rupees was received as interest. Investment will come in the opening balance sheet. Only the investment will come in the opening balance sheet towards the asset side. Besides that, in the receipts and payments account, I think those are the two items that we will get, which we need to show on the asset side. So before I show the two items, let me calculate the investment which was there. So for calculating the investment, we received an interest of 10,000 rupees. So the investment would be, if we multiply by 100 and divided by 10, because the rate of interest is 10, so we just multiply 10,000 into 100 by 10 will give us the actual investment, which is 1 lakh rupees. So this is how we can calculate the investment. How much was the investment in the previous year for which the interest has been received in the current year in the form of cash. So here, if we present the items, this is how it will appear. Cash, opening balance of cash, which we got it from the receipts and payments account. Then the investment, the old investment, which was there in the previous year's balance sheet, that will be 1 lakh. The previous year's balance sheet is the opening balance sheet of the current year. So actually this balance sheet was of 31st December 2009, but that balance sheet is the opening balance sheet of the current year. So here we can see that the cash closing balance of cash in the previous year becomes the opening balance of cash. So that's why it appears on the opening as opening balance in the receipts and payments account. This is shown on the asset side. And investment, the old investment was 1 lakh, so that also will appear in the balance sheet for which the interest was received in the current year's received and payment account. Next, we will take the other items, which are assets and liabilities. Now, the information which we are supposed to get for assets and liabilities for the previous year, that we have taken from the receipts and payments account. Now we will check the additional information. The date which they have given is 1st January 2010. This is actually the balances which are shown here. The values which are shown here are actually the values of the previous year ending. So these items will actually appear in the balance sheet of the previous year. So what we see here is subscription due, subscription outstanding. Now subscription outstanding is an asset, that is income outstanding is always an asset. Then subscription received in advance, so income received in advance is a liability. So this will be an asset, this subscription received will be a liability. Then stock of medicine, the opening stock is actually the closing stock of the previous year, so this is an asset. Then opening value of equipment also is an asset. Then building also will be an asset. So these items will all appear in the previous year's balance sheet. So when we show these items, this is how we can show it. There's only one liability, that is subscription received in advance. So we have already entered from the receipts and payments account cash, that is the opening, which is shown as opening in the current year. This cash is present in the previous year's balance sheet, 7,000 rupees. Then investment 1 lakh rupees we have already entered. Then subscription due in the previous year's ending was 400 rupees. This is an asset. Stock of medicines at the beginning, that is actually the closing of the previous year, 6,000 rupees is an asset. Equipments also from the additional information, which is 20,000 rupees, which they have showed as opening, but this is there in the balance sheet of the previous year at the closing. Then building also they have shown as opening in the current year. This is actually the closing value of building in the previous year. So all these values will appear in the previous year's balance sheet on the asset side. Then we can see towards the liability side, they have given us subscription received in advance. This 100 rupees is a liability because income received in advance is always a liability. Now after we enter all this, we add all the assets, it comes to 2,13,400. So we write the amount on both the side, and after writing that amount on both the side, we deduct the liabilities which was there, that is subscription received in advance. We deduct the liabilities, then we get the balancing figure. The balancing figure is nothing but it will be it is not capital, but it will be a capital fund. This should have been capital fund, so there is a printing error here, so it will be capital fund, and this is the balancing figure. So our capital fund is 2,13,300. Now we got the capital fund, we can prepare the closing balance sheet. Now for preparing the closing balance sheet, we have to take the information first of all from the receipts and payments account. Then we will take the information from the then we'll take the other information for preparing the balance sheet of the current year from the additional information. So first of all, let us concentrate on the receipts and payments account, which items will come on the asset side as well as on the liability side of the current year's balance sheet. Starting from the receive side, we have to take donation, then we have to take entrance fees, and if we see on the payment side, and also not to forget this investment, the old investment which is there, this also need to be taken because this investment was not sold, so we can't see any sale of investment towards the receive side. So this investment is still present, so it will also appear in the current year's balance sheet. Also it was there in the previous year's balance sheet for which the interest was received, and also even in the current year also this investment was not sold. The principal amount, that is 1 lakh rupees, is not sold. We can't see any sale of investment here on the receive side, so that means it is still present. So we have to take this investment also. So we have to take these three items. Then on the payment side, we can take closing balance of cash. This also will come. The closing balance of cash is 31,800. This also will come in the balance sheet. So this four items we will take first. So if we take these four items, it will appear in this way. Donation 20,000 rupees from the receive side. Entrance fees 8,000 rupees. Actually they have said to capitalize them, otherwise it would have come in the income and expenditure account, but since we are capitalizing it in the current year's balance sheet because it is appearing in the receipts and payments account, it is the cash received of the current year, so it will come in the current year's balance sheet. So the donation and the entrance fees as liabilities. On the other hand, the closing balance of cash 31,800, which is appearing towards the payment side, it will come in the asset side. And investments, the old investments which are still present, that also will become an asset. Now we will take the other information from the additional information. Now if we look at the closing values that will come into our account, so we have first of all, let us take subscription. Subscription outstanding will be an asset. On the other hand, subscription received in advance, we will take only the ones which are there in the closing, the values which are there at the closing of the year. So we have subscription due, it will come as an asset, and subscription received in advance will come as a liability because income received in advance is a liability. Then the others we require adjustment, so we will take that later. First of all, let us take the subscription. So we will take subscription outstanding and subscription received in advance. So subscription due in the current year is 250. If in the question, if it has any due of the other years also, that also will come here, but there is no in this question we don't have any dues of the other year. This is the due for the total amount is for the current year. So 250 from the additional information, which is an outstanding of the current year, that will come in our asset side. On the other hand, subscription received in advance, this is received in the current year for the next year, so this will be a liability. Income received in advance is always a liability, so it will appear towards the liability side. Subscription received in advance 180. Now we will take the other items from the additional information. Now we have taken subscription. The next items that we can take is stock of medicines. Now the closing stock given to us is 10,000 rupees. We can straight away take that, but then we can show the details. The opening value of stock was 6,000 rupees. Then the purchases which was made during the year was 35,000 rupees, and the consumed from the income and expenditure account we have already calculated, so we will deduct the consumption one, then we will get our closing value. So this is how we can show in our balance sheet. stock of medicines, we have to show the closing value of stock of medicines, which we already have, but we have to show the details. Opening in the additional information, opening is given to us as 6,000. Then we have 35,000 is the purchases from the receipts and payments account. Then we have already calculated how much was consumed during the year. The consumption during the year from the receipts and from the income and expenditure account, we have already calculated this. It was 31,000. So after the consumption, actually if we add 6,000 and 35,000, it comes to 41,000. So the total stock was 41,000. Then during the year, the medicine which was consumed was 31,000. So 31,000 was consumed. So our remaining value, that is closing value of stock of medicine, will be 10,000. So we have to show the closing value of stock, which is there in the additional information, but we have showed the details. The next item is equipments. So we will show the closing value of equipments in this way. They have not provided us the closing value, but we will show this after adding the purchases and then subtracting the depreciation. So this is how we will show it. Now equipment's opening value from the additional information is 20,000. In the receipts and payments account, new purchases made for equipment is 15,000. So the total value is 35,000, including the opening and the purchases. Then we have already calculated the depreciation in the income and expenditure account. So the depreciation on 35,000 was 7,000. So we are going to deduct this 7,000. If we deduct this, our closing value will be 28,000. So we will always do this. If there is any opening value, then there is any purchases, we add the opening value and the purchases, then we subtract from the total value, we subtract the depreciation. So whatever will be left is the closing value of equipments after the depreciation. Next we have building. Building, they have given us the opening value as 80,000. Now we have to depreciate this by 10%. We have already calculated depreciation while preparing the income and expenditure account. So after depreciation, that will be our closing value. So building was 80,000, then depreciation was 8,000. So the closing value will be 72,000 for building. So I hope now it is clear. That is 80,000 minus 8,000. So the closing value of building will be 72,000 at the end of the year. Now we have entered almost all the adjustments. Now our next step is to see what we can take from the opening balance sheet. Now we have to check the opening balance sheet also once. We need the capital fund. So here the capital fund we have already calculated from the opening balance sheet, that is 2,13,300. This will come in our new balance sheet. So this is the capital, not the capital, but it will be the capital fund. So the capital fund will be 2,13,300. So here we also have to recheck whether any item, for example investment, which was supposed to appear again, if there is any asset which they have not said, any information is not given to us, but we have to take that asset again. So we have already cashed the closing value we have taken. We don't need this value. Then investment we have already taken from here. Subscription due is not necessary because we have the closing value. It's the current year's one we have to take. Stock of medicine also we have calculated the new one. Equipment also we have calculated the new stock. Building also the new stock. Then advanced subscription, the new advanced subscription we have taken. So any item which if there is any item, for example they have given say furniture and they have not discussed about the furniture, then if there is no depreciation, then the same value of furniture will again appear in the new balance sheet also. So we have to recheck the old balance sheet once before we close the balance sheet. So we should remember that any asset, if the information is not given which appears in the old balance sheet, then that same asset will again come in the new balance sheet also. For example, I'm just giving you furniture. Say they have given us 1 lakh rupees in the old balance sheet. So if they have not given any information related with furniture, then in that case, even in the new balance sheet also, this furniture will also appear as 1 lakh. So that's why it is important that after taking all the items, we should again look for the old balance sheet once before we close the new balance sheet. So from here we'll take the capital fund, and investment we have already taken it, so we will enter the capital fund. So after we enter the capital fund, this is our capital fund, 2,13,300. Then we will add the surplus that we got from the income by preparing the income and expenditure account, that is 570. After we add, surplus will be added and deficit will be deducted from the capital fund. So here we have a surplus, so we will add the surplus. So after adding the surplus, the capital fund will be 2,13,870. So we have entered all the items. Now if we total both the side, we get the balance as 2,42,050. So this is how we prepare the balance sheet, and I hope you have understood how we prepare the balance sheet after this video. Thank you.